Over the past month, tens of thousands of US retail investors have been doing the same thing, dumping money into an ETF called NASA. They think it's their last chance to get in before SpaceX IPOs. On June 12th next month, they'll find out they bought the wrong tool. I personally own this ETF, so I have to tell you this. Hi everyone, I'm Lance. Welcome back. My position in this ETF is 3%. That's not my cap. That's the cap on my cap. Stick to the end, and I'll tell you why. 8 minutes today. 3 things. First, what this ETF actually holds. Second, can it really capture the SpaceX IPO pop? Third, what you should actually do before next month. At the end, 4 concrete action options. Let's look at the holdings. The ETF holds 36 companies total. Top 2, AST SpaceMobile at 15.87%. Rocket Lab at 15.24%, then Planet Labs, EchoStar, Firefly. But the one that gets everyone excited is the 10th position, SpaceX SPV exposure at 8.73%. Let me take a minute to explain SPV, because if I don't, everything I say next won't make sense. SPV stands for Special Purpose Vehicle, basically a shell fund built specifically to hold one asset. Asset managers buy SpaceX preferred shares from employee tender offers, drop them into this shell, and the ETF holds a slice of that shell. This is the standard, legal way for public funds to hold private companies. But there's a critical valuation mechanic with SPV holdings. Nobody tells retail investors this. Tema currently values the SPV at transaction cost, not mark-to-market daily. As of May 18th, the SpaceX equivalent shares in this ETF correspond to a SpaceX total valuation of roughly $1.56 trillion. But the IPO is rumored to price at $1.75 to $2 trillion. So if the IPO price is above $1.56 trillion, the ETF's NAV jumps overnight. If it prices below, ETF holders eat the entire downside. I know this section is technical, but please hang in for another 90 seconds. The investors who understand this mechanic versus those who don't will make completely different decisions on June 12th. Second key point. The SpaceX preferred shares the SPV holds are subject to a 180-day lockup after IPO, standard practice. Reuters has reported SpaceX insiders will use the standard 180-day lockup. IPO on June 12th. Lockup ends December 9th. Meaning, even if SpaceX pops 50% the next day, this ETF cannot sell at market price. It has to wait 6 months. Put these two together. On IPO day, the ETF's NAV jumps, but that gain is locked inside the SPV for 180 days. It can't get out. If SpaceX then drops 30%, tech IPOs do this often. I'll show you real data in a minute. The ETF can't sell SpaceX to defend, and the entire basket of space stocks tanks together. You eat the full drawdown. SPV is lose both ways during IPO season. Listen carefully. NASA ETF is not a ticket to the SpaceX IPO. It's a ticket to whatever happens 6 months after. Beyond SpaceX, 2 more numbers. First, 113%. The top 10 holdings add up to over 100%, which means this ETF uses derivatives or leverage. Volatility much higher than a typical index ETF. Second, 31%. AST and Rocket Lab together make up 31%. That's not diversification. That's 2 concentrated bets with a bunch of also-rans. Now the most important part. I scored every top 10 holding using a 5-dimension framework. TAM, moat, growth, valuation, team, 10 points each, 50 total. Striking result, only 2 holdings score above 38. Number 1, SpaceX SPV, 45 points, but you can't get clean exposure. Number 2, Rocket Lab, 39 points, the only truly high-quality asset in the public market here. The other 8 score between 31 and 35, including the largest weight, AST, at only 32. Let me say that again. This ETF's largest position happens to be one of its lowest quality holdings. When you buy this ETF, 15% of your money is betting on AST succeeding. Let me talk about my own position. I bought this ETF on April 1st when it launched. 3% allocation. Untouched. Why 3% and not 10%? Because this September, my SON starts at the University of Toronto. International tuition, $45,000 a year. If I FOMO and push NASA to 10% and it drops 30% by year end, I might be forced to sell stocks at the bottom to pay tuition. That's the worst disaster in family investing. So 3% stays 3%. That line, I will not cross. Why not add before IPO? 3 reasons. First, the SPV lockup means I can't capture the IPO day pop. Second, the ETF's non-SpaceX exposure is too large. After IPO, money may flow from second-tier space stocks into SpaceX itself, dragging the ETF down. Third, I want event resolution, not pre-event speculation. My plan, IPO week, don't touch. September through December, watch the gap between ETF, NAV, and SpaceX stock price. After December 9th, when the lockup ends, if sentiment has cooled and valuations look reasonable, I'll consider taking NASA from 3% to 5%, or sell it and switch to SpaceX directly. If you've got bills to pay every month, you don't get to YOLO. 3% means 3%. If you're a regular investor like me, with under 30 days until the SpaceX IPO, you really only have 4 options. Option 1, buy NASA ETF now. Fits. Anyone who wants diversified commercial space exposure, holds 5+ years, doesn't care about short-term IPO pop. Doesn't fit. Anyone trying to bet on the IPO day pop. This is not your tool. Option 2, buy SpaceX directly on IPO day. Look at history. Across the last 5 years, major tech IPOs, Airbnb, Snowflake, Reddit, held or rose 6 months later. But Coinbase, Rivian, Instacart, Rivian crashed from $106 to $30, were disasters. Almost half of retail buyers at IPO opening were underwater within 6 months. If you must buy, wait until September. Option 3, buy the highest quality individual stocks in commercial space. Remember the table. Rocket Lab at 39, the only truly clean high-quality asset. Planet Labs at 35 next. Holding these 2 directly, lower fees, more tax flexibility, higher effective exposure. For investors willing to do homework, this is the best option. Option 4, do nothing. Keep DCAing into VTI, VOO. Let SpaceX enter the indices on its own. Sounds trivial, but 99% of investors should pick this. Let me compress today into 1 paragraph. The space sector itself is a high beta, high volatility, high narrative premium space. NASA ETF, 8 of 10 holdings are mediocre, and the largest weight, AST, is one of the weakest. This is a story over quality basket. At the opening I said, my position is 3%, the cap on my cap. Now you understand why. The day my son's tuition is due in September, my account's ability to produce cash matters more than how high NASA ETF goes. Subscribe so you don't miss it. I'm Lance. See you next week.